Alright traders, welcome back to my channel. I hope you are following this channel already, and if you have not, please do well and follow this channel. So in my former video, I said I'll be making video about the institutional reference point. I'll be explaining two in each video, and now I want to explain what I call order block and fair value gap. Fair value gap and order block. I want you to stick with me and patiently and calm down to listen to what I want to say, because it will benefit you, as I promise that this channel is going to benefit you now and future. So let's start. I would like to explain a scenario around it. Yes, a scenario. You see, in the market, there's supposed to be a fair interaction, a fair business transaction between the buyer and the seller. So they are not supposed to cheat on each other. They are not supposed to overpower each other. They're supposed to be, doing this kind of. There should be peace in between them. Yes, I said I'm going to explain it in a simple way. So there's supposed to be peace in between them. There's not supposed to be war. They're supposed to, give chance to each other to buy and to sell accurately. But now, the concept of fair value gap comes in when one side of the market overturn or overdo. Yes, let me put it that way. When one part of the market actually overdo, that is when price fair value gap actually comes up. So let's look at this. A fair value gap is also called imbalance. Yes, it is called imbalance, and at the same time, it is actually called other thing depending on the direction of the market. So now, if you look at this price action, this is a candlestick, a buy candlestick, and this is another candlestick, one, two, and this is another candlestick, three. Yes, that is three. So the color does not matter, but this actually tells us that this is a bullish scenario. So what you want to look out for is that you want to look in between that three candlestick action, price action. You want to look at the one at the middle, the number two of it. You want to see if there is, like I said before, that there is supposed to be a fair interaction, which means that if price does this, yes, the other candle as well must do this. You know, the other candle must do this. They must meet each other and complete their agreement. Yes, but in this scenario, there is nothing like that. Yes, there is nothing like that, which means that there is an imbalance here. The buyers do not give the seller the opportunity to come and balance this range. So it now creates a fair value gap, and it is called buy side imbalance and sell side inefficiency. Buy side imbalance, buy side imbalance, and sell side inefficiency. Yes, buy side imbalance and sell side inefficiency, which means that the buy side is not balanced and the sell side is not efficient. Yes, is not efficient. They do not agree. There is no agreement between them. And what would happen later is that the sellers or the buyers are going to give the opportunity for the sellers to come down, to come and refill this place. Yes, to come and refill this place. That is what is actually going to happen in the future. So the price might go anytime, but it will come back at the end of the day to come and fill this order. That is what a fair value gap actually means. That is what a fair value gap actually means. So in a downtrend, um this is also a sell side imbalance and buy side inefficiency. The sellers are stronger, they have a lot of order, so they do not give opportunity for the buyers to actually push price to balance up the order, but instead they move the price to the downside. which means that they do not have agreement here. They do not have agreement here. They do not have agreement here. And what will actually happen is that the sellers, the buyers are going to, they are going to sort it along the line. They will make sure they settle it, and then they will now give chance for the buyers to come and fill this order at the end of the day before they start moving to the downside. That is how the scenario is. You see, it is very simple, and I don't want this video to be too lengthy. I don't want it to feel boring. I want you to make sure you grab something from this. So if you cannot actually recognize another block, this is what and a fair value gap rather. This is what a fair value gap is. Yes, this is what it is. It is a three candlestick price action. Color does not matter. Yes, once you can identify three candlestick, one, two, three, and you look at the one at the middle, and there is space. Even though it's a little space, even if it is as little as this, is an imbalance. Price would come back there in the future and actually close it up. Yes, that is an institutional reference point. And I told you in my former video that without this imbalance, a lot of other institutional reference points might not be valid. They might not be there. You understand? So that actually takes me to an order block. Without a fair value gap, for me, there is no order block. Even if there is, it is not valid. Yes, so this is what another block. Let me clean all this so it won't be too rough. Yeah, so this is an order block. People always have their concept around order block. Yes, some people, based on their experience in the market, they choose to use a candlestick, and another person also choose to use another candlestick for their order block. It doesn't matter. What matter is you are picking it from the right angle, from the right area. So now another block is where an institution, or where the institution place their order. Yes, where the institution actually place their order. It might be a small candle. Yes, it might be very small, but at the end of the day, that is where it started from. That is where it started from. So now, some people will say the last opposite candle before the engulfing candle. Now, this is it. This is an order block. If you look at it, this is an engulfing candle. This is where the fair value gap is. The fair value gap is here. So what most people will say is that they will say it is the last candle before the engulfing candle, and some people would say it is the last opposite candle before the engulfing candle. It doesn't matter. If you look at it very well, this one and this one are closer. Some people can even choose this is still around the area. And then in the bearish scenario, some people will say it is the last candle before the engulfing candle, and some people will say it is the last um, opposite candle before the engulfing candle, which is this. So in a fair value gap actually has three parts of it. It is divided into three. A fair value gap is divided into three, and I'm going to take my time to explain it. So now, a fair value gap actually has three parts. Yes, three parts: the upper part, the center part of it, and then the down part. Yes, this upper part is called IOF. Let me put it. It is called IOFED. Yes, this is institutional order flow entry drill. This is when the price actually would tap into this area. If price is in hurry to move away, price will tap there and then continue to go. Price doesn't have enough time to fill the fair value gap. So that is what we call institutional order flow entry deal. There is no enough time for the for the price to actually retrace down, so it will just tap into the first layer, first part of the fair value gap, and then the center of it is called consequent encroachment. It is called consequent encroachment. Encroachment. You can help me correct it in the comment section if I did not get it well. So, and then the third part of it is called fully filled fair value gap. It is called fully filled fair value gap. That is when price actually comes down to fill the whole order and then moves back to the direction. And the consequent encroachment is the 50%. Yes, the middle, the center of it. Price, most of the time, price prefer to come to the consequent encroachment of the fair value gap before it moves away. So if you are learning something from this video, please like, share and subscribe to my channel. So now we want to deal with the other block. Let's deal with the other block. Let us deal with the other block. So the other block is also has three parts of it. Yes, it has the center, the up and the down. The middle part of it is very important to me. For me, the middle part is very important. So the middle part is called the mean threshold. I think these are spelled. The mean threshold. The middle part is called the mean threshold, and if the price actually finishes, and the down part is a fully filled order block. Yes, a fully filled order block. So this is the scenario around fair value gap and order block. I told you that there must be a fair interaction, a fair, and what's it called, transaction between the buyer and the seller. So the moment there is a fair value gap, it means that one side has actually overdue. It has over ordered, and it does not give chance to the other part to actually play the fair game. So how do you take trades with fair value gap? I think this thing is rough. Please, let's. How do you take trades with a fair value gap? If you see a fair value gap, how do you take your trade? So we always believe that price is going to retrace back to the fair value gap. So what we want to do is that what I will do is that whenever I realize a change of character or I see my confirmation, I want to look for the fair value gap, the next fair value gap around it, around that confirmation, and I want to place my entry at the center, the consequent encroachment of it. Yes, and my stop loss below the low. I want to place my stop loss below the low, and price will often come down and then fill this order. And nothing, anything can happen. Price might come furthermore, and move to my direction. So you do your thing, and you leave the market to decide for you. You don't decide for the market. It might actually not even pull back to that extent before it moves away. So you don't have control over the market. You do your thing and leave the market to decide for you. And then how do you take trades with other block? In case this is your other block, or in case this is your other block, what you do is that you place your entry here, or the mean threshold, and then your stop loss below. your stop loss below the low, the recent low. Don't forget the recent low, and then you place your order and allow price to come back, tap you in and go to your direction. The same thing applicable to the downtrend. So you want to place your entry around a fair value gap, in between the fair value gap, the consequent encroachment, and you want to place your stop loss above the recent high. And then if it's order block, in case this is your order block or this is your order block, you want to use either the beginning or the center, the mean threshold of it, and then your stop loss above the recent high. So if you actually learned something from this video, please do thumbs up, like, share, comment. We don't know who actually need this thing. I think I explained in a very simple way. It is not confusing. So if you learn something, please do follow this channel and let us grow together. Thank you. Godspeed.